In the weekly CBK Bulletin dated October 4, 2024, overall inflation declined to 3.6% in September from 4.4% in August, primarily due to a significant drop in fuel inflation, which fell to 1.1%, down from 4.7%. This decrease in inflation may ease the cost of living for consumers and potentially boost spending. Food inflation also decreased slightly to 5.1%, while non-food non-fuel inflation fell to 3.4%, suggesting a continued trend toward lower consumer prices that could support economic recovery. GDP growth slowed to 4.6% in Q2 2024, down from 5.6% in Q2 2023, indicating a deceleration across various sectors, particularly in agriculture, which grew by 4.8% compared to 7.8% in the previous year. This slowdown raises concerns about economic recovery and job creation, particularly in vulnerable sectors. Meanwhile, the industrial sector's growth decelerated to 0.6%, underscoring challenges in manufacturing and contributing to the overall economic slowdown. The Kenya shilling remained stable at KSH 129.19 per US dollar, which can enhance investor confidence by providing a predictable exchange rate environment for trade and investment. Usable foreign exchange reserves stood at 8,186 million United States dollars, adequate for 4.2 months of import cover, offering a buffer against external shocks and contributing to economic stability. In the money market, liquidity remains sufficient, with commercial banks' excess reserves at KSH 21.0 billion and an average interbank rate of 12.71%. This indicates a stable banking environment that could encourage lending and support economic activity. The Treasury bill auction performed robustly, receiving bids totaling KSH 54.0 billion against an advertised KSH 24.0 billion, reflecting strong confidence in government securities and facilitating public financing. The equity market showed positive trends, with share price indices at the Nairobi Securities Exchange increasing, NASI by 1.0%, which may boost investor sentiment and attract further investments. However, bond turnover in the domestic secondary market declined by 8.3%, and yields on Kenya's Eurobonds increased by 39 basis points, signaling potential concerns over government debt sustainability and future borrowing costs. Globally, Eurozone inflation decreased to 1.8%, and international oil prices rose due to escalating tensions in the Middle East, which could pose risks to domestic inflation and economic stability. Overall, while the bulletin presents some encouraging trends, ongoing vigilance is necessary to navigate potential challenges, particularly regarding economic growth and inflation management. Closing remark. As LMN consultants, we remain committed to providing insightful analysis and tailored strategies to help navigate the evolving economic landscape. We encourage stakeholders to stay informed and proactive in adapting to these developments for sustainable growth and success.